Hello, traders, and welcome to our episode 4 of the trading psychology. I believe so far so good. You are resonating with whatever I'm discussing, the psychological pitfalls, and it's helping you improve your trading psychology. Remember, the reason why I'm focusing on psychology this particular period is because the numbers are very much worrying. Because 90% of traders lose because not of the strategy but because of psychology. So today I want us to look at two emotions that really destroy traders, and that is greed versus fear. So those are very common psychological pitfalls that have really destroyed the traders, not only beginners but even advanced traders. So you need to understand that trading emotions basically ranges from extreme fear to unchecked greed, right? Extreme fear to unchecked greed, all from extreme greed to unchecked fear. So it can be either way around, all right? And both of them are very much, or they are very dangerous when unmanaged or when not checked into, all right? So, and awareness is usually the first step to countering greed and fear. Awareness is usually the first step to countering or controlling greed and fear. So let's begin with fear. When we talk about fear in trading, what do we really mean? So this can come in form of fear of losing. That means that now you see the setup, but now you don't take the trade. All right, you are seeing a setup as materialized, but now you have the fear of losing. Therefore, it means you're not going to take the setup. Okay, so we have the fear of missing out, like we discussed in the previous video, right? The previous episode, that is episode number 3. And FOMO is now chasing trades. So the moment you chase those trades, what happens is you might end up losing more money, okay? Because you are entering trade that has already left your entry point. So you are trading from the fear of missing out, okay? So what fear does is that it causes hesitation, poor execution, and also early exit, because you can still have the fear of not getting out of the trade, because you have maybe probably you are looking at maybe the market to give you $200, but the maximum the market can give you is $150. So you don't want to close the trade, you don't want to exit the trade, because you have that fixated mindset that the market has to give you the $200 that you want. Okay, so how does greed affect performance? Okay, because greed will definitely affect your performance. So when we talk about greed, here we are talking about the market being, we are talking about you wanting more, right? If you have your daily goals, maybe probably you are targeting $100 per day. You find yourself, even after attaining the $100, you still want to trade because you still feel that you need to make more. Okay, so and greed will definitely affect your performance. And the first thing is that greed will lead to over leveraging. Right, greed will lead to over leveraging, or maybe probably a scenario whereby you tend to risk more than you can afford to lose. That is not checking into your risk management, because maybe probably you want to have a bigger lot size so that you can be able to make a bigger amount of money. Okay, so that's greed. And also, greed can make you to stay in winning trades too long. All right, you know what I mean? It can make you to stay in winning trades too long. That is, if you have a fixated mind, because maybe probably you're projecting the market can go, let's say maybe probably 200 pips, right? And then from a point of analysis, if you do your analysis, you find that the maximum the price can give you is maybe 180 pips, right? So that's a very winning trade, because the market has already given you an 80 pips, but now you want to stay in those winning trades again too long, right? So that's an aspect of greed, all right? So, and also greed can affect your performance in such a way that you ignore your trading plan. So let's say maybe probably you target 100 pips on a daily basis. Then out of greed, you, after even attaining the 100 pips, you continue trading because you want to make more pips, maybe 200 pips. Okay. So, and definitely ignoring your trading plan, right? staying in the winning trades too long, and also over leveraging will definitely affect your performance. It will definitely lead to losses at some point, and that means that you are likely to lose money out of greed. Okay, so it's good to understand. Remember, you're talking about psychology, so it's good to understand the biological reasoning behind fear and greed. I know this is not a biology class, but again, you need to understand. All right. So fear, right? When we talk about fear, what brings in about fear is what we call a mad gadala, right? it's quite it's quite a huge term to pronounce, but the pronunciation is amygdala activation. That is a fear flight activation. Okay, so fear, that is a fight and flight activation. So you are fighting yourself whether you take the trade. Okay, so because you have that fear, or maybe probably the flight is on, now you are doing the fear of missing out. So you are taking trades even prematurely after they have left your entry. Okay, so greed, it's all about the dopamine rush. Okay, so the pleasure of seeking. So you want to seek more, all right? Even after getting maybe probably 20 pips, you want more, all right? You want more. So that is the dopamine rush. So what you need to know is that your brain, or the human brain, is wired to react, okay? So not to trade logically. So it's wired to react. So you have to really put your best foot forward, so that now you don't react, okay? And you start trading logically. I know this is where now there has to be that contention. You really have to really practice so much that you don't trade from a reaction, but you trade logically. All right, trading once the price has gotten to your targets, I mean to your points of entries, to avoid the formal. Okay, so you need to understand that maybe probably fear triggers, they come from big losses, right? Drawdowns and volatile markets. Because when the market is volatile, sometimes those crazy movements can make you fear. When you're in huge drawdown, again, you can trigger fear. When you're in big losses, that triggers a fear. So what are the great triggers? Great triggers is big wins, news hype, and overconfidence. Those are the things that trigger fear. So if you have that, those are the things that trigger greed, I mean. So if you have those kind of triggers, right, then you need to know that you're either operating from fear or greed. So it is important to use journaling to document your triggers. The reason why in the journal, you're not only documenting the entries, the TPs, the stop loss, the strategy, you also have a session for comments. This is where you comment now in terms of your fears. What triggers did you have? All right, and those triggers will help you to reveal whether you are trading from a point of fear or you are trading from a point of greed. Okay, so self-regulation is very important. You really need to be in a point whereby you're able to regulate yourself. You're able to control yourself. Okay, so and to do that, it's important to learn how to step away from a win or a loss. Don't attach yourself so much into wins. If you attach yourself so much into wins, it might lead to overconfidence. If you attach yourself so much into losses, it might lead to fear. All right, and overconfidence will lead to greed. Okay, so you need to use breathing techniques before entries. If that maybe probably you realize that you have issues to do with greed, you have issues to do with the fear, and also maybe probably so taking those breathing techniques is making yourself to relax, to feel comfortable before you take that particular trade. And also now implementing your checklist when trading. Remember, I've so much talked about the checklist. So you need to have a checklist, and a checklist will help you to confirm that before you take a trade, everything has really confirmed according to a checklist. So that means that's a high probability setup. All right. So again, when you're trading, it's good for you to be able to overcome fear and greed. It's good to have a neutral mind, right? So what do I call a neutral mind, or a neutral mindset? Because you find that a neutral mindset in trading wins big. So you need to understand that best trades are made in calm states. When you're in a calm state, That's when you're able to make those best trade, because your mind is relaxed. You have nothing that is bothering you. Okay, so detachment from outcomes. Again, like I said, detach yourself from wins, detach yourself from losses. And this is what is going to bring consistency, because the moment you attach yourself to an outcome, let's maybe say win, it will lead to overconfidence. Overconfidence will lead to greed. If you attach yourself into losses, it will lead to less confidence. Less confidence will lead to fear. Okay, so you need to understand that uh, when it comes to trading, actually, I usually say that for you to be able to overcome all these things, greed, fear, I usually say that you trade like a robot and you analyze like a human being. Okay, so you analyze like a human being. So your analysis should be up to point. Okay, so trade like a robot, but remember to first of all analyze like a human. Okay, so some of the tools for emotional mastery that can help you master emotions is affirmations. All right, so you need to have affirmations. Again, I've talked so much about affirmations. Affirmation, you can tell yourself, maybe I trade the plan, no emotions, or maybe probably I'm trading from a point of fear, and therefore I will not maybe probably fear the market. So you can have different affirmations. Okay, the ones that you feel are really going to help you in terms of mastering your emotions. Meditation and mindfulness, it's another strategy of mastering your emotions. And also pre and post trade journaling. So pre is whereby you analyze the market before you take the trade. Post is whereby now you journal that particular trade. So meaning before I take a trade, I have to have gotten the reasons, or I need to have the reasons why I'm taking that trade. So I'm journaling that as well. I need to take this trade because I'm looking the price coming to point A, and then maybe probably triggering my entry and going to point B according to my anticipation. And then now after the trade has either hit your TP or your stop loss, make sure again you journal. Right, now you journal the results. Okay, so what are the key takeaways here, even as I wind up? So you need to understand that greed and fear can hijack your strategy, right? So if you're not keen, greed and fear can hijack your strategy. Also, you need to recognize your emotional triggers early. And the reason why I always emphasize that, if you're a newbie, don't overstay so much on your demonstration account. Demo account is basically to help you fine tune your strategy, right? So you, after that, you better even deposit some small amount, let's say $50, $100 in your live account, so that it can help you now to understand your emotional triggers. Remember, unfortunately, the psychological bit of it, which is 80% of trading, can never be learned in a demonstration account. So you have to learn it in a live account. So the reason why you need to start small, and the reason why you need not to overstay in your demonstration account. Okay, so then aim for emotional neutrality every session. So you need to be emotionally neutral. Okay, so don't look so much on profits, that might lead to fear. Don't look so much on losses, that might lead I mean, don't look so much on profits, that might lead to greed. Don't look so much on losses, that might lead to fear. So you need to be in a neutral point. Okay. So as I wind up, I believe you've enjoyed this, and if it resonates with you, again, make sure to like, subscribe, and even comment and share this to someone, because it might help someone else. And until next time, stay disciplined, stay focused, and trade with caution.